Hey guys, the goal for this video is to give the top-down approach and show you where we are today. So we've got NinjaTrader 8 as the platform, and I'm using Shark Indicators, Bloodhound, and Blackbird. Right now, Bloodhound has a somewhat current version, and I recommend that you always check the page. Go to support, documentation, installation, licensing updates. You can scroll down to the installation and click download the latest version. It will show you the change log, and you can read about the different bug fixes and improvements. The platform was updated for version 8 about 2017, 18, something like that. So it's been just a recent change to this new architecture, and there still are some things that need to be resolved. They've got a running tab of where we are in this process, and they're doing a great job, I think. But as any, new software development, there are some things. I've got the labels on my market analyzer now not working again. This is a technical issue that they've been working with. It intermittently occurs, but we should get that labeling fixed. It has worked several times in the past, so I think there's just a little bugaboo. And once we get the labels on here, that'll help you see what we've done on the left side of the market analyzer. The premise for this basically starts with a fast moving average, just a very simple premise on a higher time frame. And you generally want to be directionally biased in that direction. Let the market lead you to the bias where at all possible, using your support resistance. And for intraday trading, I use gaps, and we have a big daily gap in the chart that got rejected, and so we are just in this little triangle of consolidation after rejecting that gap. And so anytime you're in consolidation, it's not as promising of a continuation. First, the momentum, as you can see, is red. So you don't really want to be taking longs on red momentum. You want to wait for the momentum to be already in force, and that way you have the wind at your back, so to speak, when you have the higher time frame condition. So we are in weekly, daily, 60, 15 in all green, and that leads me back to telling you about the strategy. It just started basically from the Market Maker's Edge, Josh Lukeman's book. It's a quick read. There's only a couple of pages really that encapsulate, I think, the success behind his strategy, and which is being able to spot the trend on a higher time frame and trading the middle, the meat of the move. To focus on catching and trading. So staying away from the tops and bottoms and wait for that momentum and trend velocity to be in your direction. And so also to limit your exposure time to the markets for the what he calls the open and close price. You want to be trading on the right side of the current open, and when that is on the right side of that prior close for a directional move. And that is the reason I put the opening range indicator as the first, set for my system to be able to trade that directional bias and using this higher time frame fast moving average when they're all together. So weekly, daily, 60, 15, all the same above the line. And the market analyzer is perfect to demonstrate this because you don't have to have the bar closed necessarily. It is a live condition, so whenever the current price is relative to that line on a higher time frame level, the market analyzer will signal that directional change. So that's how I use the market analyzers to lead me into the current market state using trend, and then I use other solvers to provide information for me, linear regression and momentum. Momentum is very key to my strategy, using that meat of the move, momentum and trend, and then taking a trade with linear regression as the last component that I put together for this. Let me see. The linear regression indicator, it is the most recent indicator, the LRT lines. It's both a trend identifying indicator and a trend following indicator. So it's like the Swiss Army knife. You're going to get the least squares fit method. So that's the best fit method. So here's your point A to point B. That's a direct, high to high. But the linear regression indicator will give you that least squares best fit method, giving you all the closes above the line, fitting them all in. So that's why they call it that. And you can compare it to, say, a moving average, and you can see that the linear regression line is far more accurate as far as the direction that price is actually trading versus the moving average, which gives you that reversion to the mean back into it. And so that concept of putting the opening range indicator for the opening price directional strategy and closing price from Lukeman's book, and that's about it with the fast moving average, and that's it really with the momentum. And so that gives me plenty to do, and I can go into the details very quickly with you since you've gotten the indicator package of what the indicators are. The last component I'll just mention real quickly is the what I think is the best indicator of the entire suite, and that allows you to get that probability distribution of your range just using a standard range that I think algos, they just use the standard period for good reason. But so you can get that understanding of how these statistical levels, these standard deviations of the bell curve levels work. You can use that knowledge to trade this contract, and with this overall concept, you want to be trading with the trend, momentum, linear regression. So the profit targets are just the icing on the cake. You can bring your targets out. This is the second level, 1 2 3 up, 1 2 3 down. Those are your targets, and anytime you're in the middle, you're just balancing in a normal one inside the one deviation, which is very helpful for you to adjust cycles, adjust 2 cycles inside that area are very easy to hit because they're minimal. They're not out of range, so to speak, as you get when you're pushing outside the standard deviation. You start picking up that range expansion rather. You can see that the algos are running to the levels, the targets. You can see the setups. So you can wait for your ATR inside of all this, but we'll get into that. Let's put some of the indicators on the chart real quick. So here is a 30-minute chart with just the weekly, daily 60-15, the trend filter that we want to be trading on that side of. So when we add the opening range indicator, I put two instances of it on there. First, I want the 1 hour initial balance. Okay, so that gives me the Globex session versus the US session, and that's the first hour of the US session. Anything usually outside that first hour is a range expansion, and especially you want to trade for, using your weekly, daily 60-15, going always in the direction of that higher time frame trend. And then the open. So here's the orange line is the open. You want to be trading above the open long or below the open short. The other indicator you need to have on your chart is the prior day high-low close and open high-low close. And here you can use your gap runs. So you can tell if you're opening, above the prior close, price could very well come back to touch that level again, closing the gap. And that's a very common intraday trading pattern, closing the gap and then trading away if you're short from that prior close on range expansions. So just having a underlying concept of range where you are, extremely helpful. And then knowing where your statistical levels are that you can trade to. I like that 1 hour initial balance range, so I put it on a market analyzer, and that gives me an indication of what the 1 hour initial balance point range opportunity is. So like if we look at the chart and measure this with the ruler, the yellow to the yellow, 115 points, and we were showing the opportunity was 100 points. So you get an indication how powerful this is, knowing how to work within your ranges. So I can tell you that that first hour initial balance, was 100 points. So when the market opens and you have a bias long or short, you should be trading that, bias, and especially when you're above your trend filter or below your trend filter. If you're up and down on that trend filter chopping sideways, not so good of a, trading opportunity because you're going to get the back and forth. So just having the ability to go into your higher time frame and work with that will bring you into some consistent, hopefully consistency with your trading. So the other leading indicator, like I said, is the linear regression. So I want to put that on the chart and show you how powerful that is. Now you can put as many linear regression lines on it as you want. I have four. To show you, I recommend that you at least put the main trend line on there, and your slow channels. And you can control your slow channel parameters. That just puts a band offset from a distance offset from the main trend line. So we know that the main trend line is a least squares statistically fit method of where using a statistically significant level also of where the trend should be. So if you want to offset from that trend by a certain distance, you can play around with those settings here and put whatever you would like to offset against your main trend line. So if you wanted to see what a 5, 6, 7 looked like, you would get the middle of the trend and offsetting boundaries. So you're looking for a return from your boundary level back to the middle. And so when you tie that into your equation, there's a method of getting even tighter by dropping down to, say, a 5-minute chart and requiring all four of your linear regression levels to be in the same direction at the same time. And you can do that in either on the chart to show you, but it looks like spaghetti bowls. So I don't like doing it. The lines are just all over the place. They don't really make sense. They intertwine and you're not, sure what it's supposed to be showing you. It can get just really messy. And confusing. So the pattern is to have price above or below all the levels at the same time. So when you turn it into a binary, it's like, is price on the opposite side of all of those lines, go that direction. And you realize that you're using that linear square least fit method to do that. So you can turn the levels, the lines off the chart so that they're not just messing everything up and making it too confusing. And you can put those lines, I'm taking the 2, 3, 4 back off the chart, so I just have the middle and the ends, and I've got the 1, 2, 3, 4 on the monitor. So when you see the LRT 60, that's on a 60-minute, they're all together on a 60-minute line. Your least square fit method for the linear regression for the 60, the 15, and the 5. And then I have momentum 5, 15, 60. And let me tell you, when the algos are running, this is all going to be lit up like a Christmas tree in the same direction, making it painfully obvious, the meat of the move. If you're, ever wondering what the meat of the move is, it's, the math is right there. You don't have to second guess yourself or, do like I do and have to analyze every single squiggle or line. You can rely on this market analyzer to show it to you because it's showing you the active levels real time, not waiting for a 60-minute bar to close, for instance, with a daily bar to close. It's like, is the condition happening right now on that daily time frame in a live condition? So much more like an algorithm, this market analyzer. So very rarely do retail traders trade bar close false with real-time data. Most strategies require that bar to close, and I'm trying to feed all the plots together at the same time and get that signal. So when we put all this together, we can have are profit targets to trade to. Again, using the statistical methodology, if I know that that first hour trading is going to be 100 points, I can put the open on my chart. Well, let me just add this indicator to our chart here, because here's our targets. So you can, I like the RTH session targets. So we'll start with that. And you can see that it's kind of hard to see with everything on the chart. Let me put the cross local on here. The dashed lines are the first standard deviation. That's your LR1. And you can see that prior close is right in the middle of it. That happens a lot. You'll notice that that prior close is often in the middle of that first deviation of the RTH session. So price will stay inside this, and then when it breaks out, it's going to be heading to that PT2. So there's your range extension breakout, usually preceded by a bigger ATR bar to signal your move, or that's what you would like to see. You don't want to see drift, little tiny indecisive bars. You really do want to see something that's going to be leading you to your promised land. NQ is very famous about getting you right to a level and then turning around and not closing the level. But so follow the indicators, use the higher time frames whenever possible, and then have a target to trade to using your statistical levels. And that's what I'm trying to get to. So if, for instance, that 100-point range is a little bit outside of my budget to manage my risk, to get all of it, I can, divide it into sections. And so I'm going to be shooting for these lower 1, 2, 3 targets to trade to: 35.50, 71.25, 99.50. And you can do the same thing for the ES. You can see that the ES point range was 23.75. And then you can break that out. You can say within that first hour, I should be able to get 8 points or 17 points or 24 points out of that on a statistical basis from the last 14 sessions. So it's laid out right there, gives you your target, and then using these tools you can break it down even further. You can give yourself a 1-minute range, a 5-minute range, 15-minute range, or 60-minute range to coincide with what you would like to have that information for at any given time. But always trading within that overall framework of market condition, obviously failing at this gap line, and this second part of the PT indicator, I can show myself now whether the range is expanding or contracting, and I'm able to go inside and grab slope and trade up or down whether the range is expanding or contracting. And that makes a big difference to me on especially taking a short. I don't ever want to take a short on a range contraction. That's just chop. Then you want to just wait for your reversal long signal in a low range market. So knowing these type of things, you can, of course, adjust your algorithm, your trade signal that you're putting together. And then using Bloodhound to put the conditions together and create your templates. So I have a couple of templates that I can show you real quickly. Can show you the linear regression template. I guess I put this one together for Blackbird. Hang on. Oh, there it goes. Okay. So this is set up, to identify linear regression, and using that least squared fit method, and then you can come in even tighter to require all conditions to be there. Then that's your meat. So using that least squared method, you could make a decision on to participate at any given time, um, and just trading the regression itself. I trade the 4 and recommend that you trade the 4 if you're going to be just wanting to trade regression with your strategy, um, and find that meat move, uh, or at the absolute minimum the 1, um, if you're trying to trade trend meat. So you can put these combinations together using slope and momentum, and to get, a linear regression with momentum and slope, and then code them yourself. I mean, you can get the plots, so you could come up with everything that I'm doing with Bloodhound and this indicator. So so that's the linear regression indicator, and how you can use it to get signals in your time frame and your direction. Um, so have it, just set up if you want to look at what a linear regression pattern is, knowing that that's the least squared fit method, and trade to the outside of your bands, and take the trade off, because you can um, measure. I mean, you can go back and just eyeball to see if the levels that you've selected work with your chart, or is price, exceeding it too often, and then you would want to expand your bands. But once you get an eyeball, trading is like horseshoes, close enough. Once you get an eyeball of what the volatility is away from that main trend line, you can set that level and sort of rely on it, and then take those trades, trading back and forth from the edge of the linear regression band back to the middle. And I back tested that strategy over 6 months, and it worked out really well for the equity indexes. So that's another template and strategy. Let me pull that template up. I have so many templates. I'm going to just give you a blank template real quick. I can't find it. Let me add it. Here we go. Very good. Okay. Sorry. So this template seeks to go to the outside of the band and come back in, and I've been very generous with the levels, trying to capture exactly what this is. And so you trade back to the middle, and also you can use an EMA, trend filter, and trade either to the trend filter or the LR1, whatever it hits first. And so I've got that exit logic already built in here. And then I can tighten it up with more conditions. I'd change the conditions up a little bit. Um, so I was back testing these, and they were phenomenal. I mean, outstanding, phenomenal. I was blowing my mind, phenomenal, how well they tested. So just taking them from the edges back in, so I can show you how to set this up with the LRT lines indicator and Bloodhound, just using a few things very simply. Or you can get my template. I'll be working on this template to give to my members. The one thing about reversals, if you're in a strong trend, you're going to get rolled over like that. So you want to make sure that there wasn't a big news announcement, or something to cause a directional breakout strategy. So, but overall, I mean, when you back test a strategy and you get the type of results that I was finding, you get very excited about it. So, very good. And then the other template I can show you is the high-low 2. Well, wait. The LRT lines, the opening range. I didn't show you the opening range indicator. Okay. The opening range indicator. Cancel this. Hang on 1 second. Okay. I use that 1 minute range for my strategy. And this goes back to putting my original thesis together. You want that to trade in the direction of that higher time frame trend whenever possible, and momentum and linear regression. But this is 1 minute range. This is just trading. If it's above the range, go long. If it's below the range, go short. You can trade that gap run. There was a prior day close up here. That's your prior close. So that was a gap run right there. And set it up to trade the Globex if it's outside the Globex range. So you see we were all inside the Globex range. You didn't get an outside signal. But if you just wanted to trade outside Globex, for instance, and run an algorithm to see how well that, trades when you get outside Globex, that, the goal would be just like you're seeing here. You would be waiting for that breakout. So you can test these. And then I like the mid-band of the 1 hour initial balance. Mid-band myself, just as if it's above that 1 hour initial balance halfback. And that, don't confuse that with a 30-minute range. I mean, I do have this as a 30-minute range available. A lot of people will trade that 30-minute range in the equity indexes. So I've got that on the template. But if I'm trading, I want that 1 minute range. So there was a perfect opening drive day. Well, you don't see too many like that. May 11th. You know, everybody's expecting, and here it is. Look, it's into the outer bands, and you had that breakout just sitting on that upper band. That's, and it's below the 4. That would have been very hard, to take these trades. But when it did break out, it went above the 4. That signaled your breakout. So if you had the linear regression template sitting next to here, you probably would have seen your linear regression breakout, because it's above the 4 right here. And that would have been the time to really, find that meat. Okay. So when you put the components together and can visualize and understand what you're seeing and why you're seeing it, and you want to know your range, how far to go, what your bumpers look like on a normal distribution. Am I going to turn around? Is it opportunity to trade back to the middle? Or how far do I have to go inside my 5-minute, 15-minute, and put that together in Blackbird. So that's the part that I've been struggling with. And a lot of it has been, my mess ups, but a lot of it's also been the platform. Just we've been getting the platform ready for, integrating Blackbird changes for that NT8 architecture, and they've done a great job getting it to where it is now. A lot of my issues have been resolved, thankfully, just this year. And now it's on me to get used to coding this up right. So I did come up with a little template that I'm working on trying to put together with the concept of using the statistical levels from the market analyzer. So using this opening range concept with these components, except I don't have the higher time frame trend in it. I'm waiting to get all this together, and I'm going to add that as the last piece. So I have this partially done, but for the algo. But once I get this together, I'll have the algo trading to these levels on these conditions. And I've got a runner to go outside, the range. I've got a gap run returning, away from outside the range back to the prior close. And so on the gap, the target is the prior close. So that's where it's returning to. So that's your target. And then that RTM trade that I showed you that was so profitable. I'm going to get that set up, running either with this runner gap strategy all together, or I don't know whether to combine these or separate them out into a separate instance. I don't know which would be better on the CPU, but that's basically it. Runner gap, reversion to the mean. That's my world, right? With linear regression, momentum, and trends. So that's the reason I've selected these components. Forecasting short-term volatility, and understanding the concepts of liquidity. Right now, the liquidity is very low. People have left the market. A lot of people have closed their accounts, margin calls. They had long-term positions in and just got hammered over the last 3 months. So, as the markets, we are the future market. So, if they start reopening the economy, you would think that this would spark some real growth. It just depends on how much of this artificial growth has to get backtracked before we kick back into the real growth. So, as long as we can trade long or short, what do we care, right? We just want a strategy and have a plan and automatically take the trades to our planned targets whenever possible and just redo it every day. You're not going to get all winners, but you're going to get enough of them. If you can just stay with your program and not deviate from it and realize what we're doing. We're not trading every tick, and in the market we have a template and a statistically based profit level plan. So in that you would automatically adjust your risk in several different ways that can be, back tested to see which is the most favorable at any given time, but at least a one-on-one with your profit target, at least. Okay, we'll see you in the trade room. Thank you very much. I hope this helps, and hope we all have happy trading, right? We have plenty to do, so that's what I'm looking forward to. Really looking forward to seeing if we can get this working. I think we can. I hope so. That's what my plan is. All right. Thanks, guys. I'll keep you posted. In fact, I'm going to be posting my results starting Tuesday every day. We're going to show which strategy was used and what the results are, back tested and walk forward test. All right. Take care and have a good weekend.